Welcome back to the channel. Happy Labor Day to all of you guys out there. So today I want to bring nothing other than to you and say please like and subscribe to the channel. So I want to break down approximately 5 to 7 stocks for you today that I think it's a guarantee. But guess what? Nothing is guaranteed in the market. But also, I want to inform you that these stocks are great companies. They're striving for excellence and they have been doing good for the last 1 year and also year to date, except for one of them, which is nothing other than Intel. But I'll get into that. But please, guys, spread the word. Let others know about this channel. I started this channel because a lot of people have been inquiring and asking me, hey, can you inform me how to do this, how to do that in regards to the stock market? So I said, okay, all right, let me just create a channel so I can inform everyone, reach and teach each and everyone that is interested in the stock market. When I just started, I was struggling with my day trades, with my swing trades, how to identify patterns, how to identify a great stock, how to identify also a great company, and how to find a great company at a quality price. Again, quality company at a great price. And also that can boost your overall capital investment. So let's get right into it. Again, who doesn't know me? I'm Damani. I do my regular 9 to 5 and I also invest in the stock market. I trade each and every day. If it's not swing trading, it's more of a long-term investment or it's my day trading. But I normally take my day traders on my days off. But I'm working towards my full-time investment. But let's get into it. So enough about me and right into what's going on. So this week bring to our attention, we're looking forward to Friday. Why we're looking forward to Friday? Because at 8:30 we will be getting non-farm payroll, and also on Thursday we're getting initial claims and continuous claims, and we're looking for that unemployment rate. This is a crucial information for Jerome Powell, the Federal Reserve. We're expecting September to be the worst month there is in the stock market, but let's see if it break it or it brings more joyful moment in our lives and also to the stock market. But also on Yahoo, a crucial job report watched for this week. So the Fed is watching this report, and it's a crucial report for them because it's going to bring a lot of heat to the table, and also election is coming up, so the stock market is going to be all over the place. But guys, please help me to welcome nothing other than Nasdaq market, because it has been doing tremendously up and down, but overall doing great. But the 10-year Treasury yield continues to climb. Not a great sight, guys. We don't want to see this in the market. Why? Because it is bad for us. So, as investors, so that's one thing to get out of the way. But I want to break down a couple of stocks for you guys that I think have great potential. But I want to start with Intel. Why? It is the most downward stock in my portfolio right now because of bad news. This was my previous support and it becomes now the greatest point in this stock life because the stock has been getting a lot of beaten. So let's look at the stock from 3 years ago. If you had bought Intel at even $24, you would still be down now. The stock took a lot of hit from 3 years ago, previously supported 24.87. Now the company is still down, but from previous lows, the company is making some stride, currently trading at $22. But also, they have some great news that came out for them. So, Intel CEO ideas for bringing back the company to life. So, they're trying to revive the company in Spain out of error and retreat in Germany. So, they took their business to Germany. Previously, they had some good business with Apple, but Apple ditched them to make their own product, which is most companies are trying to do now. Who's Intel? Intel is a company who makes software. They also make graphics cards. They make chips. So most of our Apple computers that we have from 20 right on back, 2020 right on back, we're looking at some Intel graphics cards in them. Also, we're looking at some Intel processors. So they had great business. Also, the government gave them a lot of money um, this year, earlier this year, but it still didn't help the company because their business, they don't have a lot of business. Therefore, their revenue is not the greatest. So let's try to break down Intel a little bit on what's going on with them and how can we benefit from this low, tremendous low of the stock. So on here to date, the stock is down. No, let's go over here to date. The stock is down 56.14%. That's not where you want to be. But the reason why I'm watching this stock, it's a great company, but it's just bad business right now. They need to find other streams of revenue and how they can revive their company. And 1 year ago, if you had bought Intel, you would have been down 35.76% on your investment. The stock has been doing nothing but on the lower side. Are we at the bottom of Intel? Let's go over and break this stock down. The market cap for this stock is 9.23. Oh no, this is our intraday, which is 9.234 billion. But the market cap, they have a PE of um, EPS of 0.24, which is not somewhere you want to be. But the company is a great company, but they don't have business right now. So their 52-week low is $18.84 and high, which is $51. But to some extent, Intel failed to go back there. And also their market cap is nothing other than in the trillions. And that's something we're great for a company. But unfortunately, the company has been in the waters, but I think it's still a buy. I'm watching to see what happens tomorrow when market opens. As you can see, it's trying to retreat from previous low. They have new businesses in Germany. So let's see if we get some good news. RSI is looking good. MACD is looking good. And we're trading above our moving exponential line. So this is great for Intel. Got rejected, consolidate. And we're looking to retreat. But with great news, earnings beaten, can bring this stock back to where it was before. So we have just a support for this stock. We have no resistance up here. So we're still trying to see. Previously, it was getting resisted at $35 at our 200-day moving average, but we're no longer there and we're in the waters. So only great news can revive the stock from all the beaten hat it has been taken. So Intel is one of the stock that I'm watching. Again, there is news out there, a lot of news. Do your own due diligence before you even think about buying, investing your hard working money in any stock whatsoever. But the stock performance is not great. Comparing to the S&P 500 here to date, again, it's down 55.55%. 1 year, 34, 3 years, still 55. Six. So if you have bought the stock 3 years ago, you would have still be down on your money. So do your due diligence before you even think about getting into Intel. All right. So next on the list is nothing other than Google. So let's go over to Thinkorswim and we have Alphabet right here. So Alphabet was trading at highs. They had some bad news. Black Monday came about. Market sold off. Alphabet took a hit too. They missed earnings, took a hit, and they sold off, pushed up, sold off. So I still think the stock is in the consolidation phase. So we're trading below $170. Is it a great company? Excellent company. So let's go over and see GOOG. Let's go over to Yahoo and see what's up with Google. So Alphabet, again, great company. If you had bought this stock 1 year ago, you would have been up 17% on your money here to date. If you had bought it in January, and if you bought it 1 year ago, you would have been up 21.86%. So last year, this time, if you had bought Google, you would have still been up on your money. So it's a great stock to buy. I am watching it and I'm waiting to see what's going on with it. So 3 years ago, if you had bought Google, you would have been up just 14% on your money. Comparing to the S&P 500, Google is still not in the range of passing S&P 500 performance. So again, it's something I am watching. As you can see, took a hit and we're still trading below our moving exponential, meaning that the stock is just consolidating. But once with good news going forward, and I know there was going to be good news because previously I was watching Google at, I think at 100, oh my bad, at 131 a share. This was trading, let me see, this was in April. Google was trading at $131. I was watching the stock because it took a hit, and I said, hey, this is a great company, but I did not go ahead and purchase any shares. So if I had bought this in April, I would have been up tremendously on my investment. So it's a great, great company again, currently trading below expectation, but it's a great company to add to your watch list. And when the time is right, you should get some shares. But for now, I think the company is a buy. It's definitely a buy for me. And on our third stock for the day, we're looking at Microsoft. Microsoft has been doing tremendously well. Was trading at $468. Got some bad news, sold off, pushed up, got rejected at our 200-day moving average, and now we're back where it hurts. So we're trading below $420 a share, which is good. Again, Microsoft has been around for decades. If you had bought this company 3 years ago, you'd have been up tremendously. So the stock is still not in a buying position for me because on the 3 year chart, we're trading below $423. We're trading below our moving exponential line. Our moving exponential line indicate that the stock is going nowhere but upwards. As you see, we have been trading above our moving exponential line. Sold off here, got rejected, found support, previous support. Again, 3 years ago, previous support for this stock, come and turn, initial support. So we found a support here again and push on up, push on up, push on up. Again, guys, sold off at 385 and now we're going upwards. So with this month, almost, so beginning of this month, as you can see, guys, one thing I've noticed with Microsoft, on their previous sell-off, the stock tends to find support at previous sell-off. So it happened here, one, it happened here, two, it happened here, three, it happened here. And on the pattern, what the stock does, find support, new highs. Find support, new highs. Find support, and I'm pretty sure it's going for a new high. So this is a definitely buy for me. Definitely buy for me. Again, great company at reasonable price. It's worth it because 3 years ago, if you had bought Microsoft, you at $213 a share, you would have been up tremendously on your money right now. So again, great company, just bad news right now, and I'm pretty sure by the end of the year, this stock will be trading above $500. All right, so do your due diligence before you even get into Microsoft. But from the technical aspect of it, it's a buy for me. It was a buy at $386, and it's still a buy right now for the long term, not for the short term. And nothing other than NU. This is a new stock that just brought to my attention. So let's go over and break it down and see what this company does. Right, so let's go over to nothing other than our tech buds and plug in NU and see what they're about. So NU is a holding company that does their business in Brazil. It's a financial company and it's doing tremendously great. Strong buy, up long term, intermediate, and short term up. It's just a bullish run on this stock. It came to my attention today, and I said I want to bring it to you guys to share it with you because it's a great stock that's trading below $20 and looks good to me. So market capitalization at $771.56 billion, and an average day volume of 53.16 mil. That's great. Next earnings days nowhere near, but they had a couple of misses, and it seems like they're on their path of growth right now. It's something to buy and put in your portfolio because the company has been performing well. So year to date, the company is up 81.02%. And 1 year ago, if you had bought the stock, you'd have been up 120.15%. This is ridiculous, guys. And it have a strong buy ratings. So this is a good stock. And you holding is a holding company which engage in provision of digital banking service. So they do digital banking service and was found by David. So again, do your due diligence on this stock before you even think about pulling the trigger and buying any shares in this company. But I can tell you the stock has been doing good, and I added it to my watch list, and it's something that I will be watching because on the next downturn, like it did before, was a trading at $9.64. And look at this rally, guys. From down at $9, we're currently trading at $14.97 a share. Guys, this is a deal breaker for me. 3 years ago, the stock was trading down at $3 a share, and look at this massive movement. So what I will do, I will set my alert to see if the stock do pull back. I hope for it to pull back, because with this pullback, I am definitely getting some shares. I'm going to definitely do my due diligence, do some more homework on this stock to see what's going on with it, and then I will make my decision to buy. But I like this company. This company has been progressing from $3 3 years ago to $15. I wish I had known about this stock, because this is a great investment for me. And throughout this year, January 2nd, the stock was trading at $7. And look at this, with numerous earnings. When earnings came out twice, look at the stock trading at $15. All right. And this is one of my new stock that I've learned about today as well. Not looking good. Definitely not looking good. I don't like what I'm seeing right here, because it's a lot of upward, downward. Let's see 3 years ago what the stock was doing. Was look pretty good. At this point was trading at $33.75 and push on up. So let's see what MRVL is about. Let's go plug the stock over here and see what's going on. But please, guys, remember to like and subscribe to the channel, because I'm here to break stocks down for you and offer you what you request in regards to stocks. So let's see, what's our tinker? MRVL. What is MRVL? Stock looks good. Weak absence, up long term, intermediate, and short term upward trading. Looking very bullish. Was trading at $79, took a hit. 52-week low was 46, and 52-week range is $85. Earnings coming up, so it have quite a few earnings was missed and beat, and let's see if next earnings beat. But it's definitely something to look into, because if you had bought the stock 3 months ago, you'd have been down 1 month, you'd have been up. But year to date, if you bought it 1 year ago, you would have been up 32 to 33% on your investment. And if you had bought it from January, you'd have already been up 28.2%. It's a strong buy by our technical analysts. And 1 year ago, the stock has been doing good. Also, it's a developing and sales integrated citrus. It's produced include data processing unit, security solution, automotive. A lot going on with this company. It's something to look into, guys. Do your due diligence before you think about even buying it, because the chart looks all over to me, but it seems like it's a long-term trade. So I guess when they came up with their IPO, they were trading at $93, got rejected as usual. In consolidated, pushed up, got rejected. and also got rejected, pushed up, got rejected, came. But one thing I noticed, higher highs, higher highs. So each time the stock sold off, it make a new high. So again, it's something to look forward to. And their previous high at IPO when they're entering the market, let's see, 5 years ago. Again, previous high is $93. So this is something that I will be watching to see, but the stock have a lot of downward upward movement. Again, solely do your due diligence before you enter any trade whatsoever. But that's all the stock I have that I wanted to bring to your attention today. So please, again, let me know if there's anything else I can break down for you guys. Message me, make your comments, like and share. But until then, stay green in the market and stay strong.